All right, welcome back to the deep dive. Today, we're tearing into a fascinating, really multi-layered analysis of AMD, the semiconductor powerhouse, our focus, its explosive role in the burgeoning fields of AI and data centers, and what that means for its stock outlook.
Sounds good.
We've got an incredibly detailed analysis in front of us from a top trader, JinLog, titled AMD AI and Data Center-Driven Stock Outlook. And this isn't your average news brief, right? It's a deep exploration of market mechanics, strategic moves, and a very specific disciplined trading methodology known as VPR.
Indeed. Yeah, our mission today is really to unpack this rich source material for you, our curious listener, and extract the most important nuggets of knowledge. We're going to dissect AMD's recent financial performance, their bold strategic moves in AI, and then really dive deep into some sophisticated technical analysis, stuff like rhythm patterns and Elliott waves.
Okay.
We'll also look at broader market sentiment and, of course, weigh the opportunities against the inherent risks. Always important.
Absolutely.
Yeah.
Think of this as your shortcut, maybe, to understanding how expert analysts approach a high-stakes stock like AMD.
Right.
Even if you're not a seasoned investor yourself, you'll gain some profound insight into the forces shaping the bleeding edge of the tech landscape and how diverse pieces of information are woven together to form a truly comprehensive picture. Ready to get started?
Let's do it.
Okay, let's unpack this then. The very title of our source immediately flags two massive tailwinds propelling AMD right now: AI and data centers. Why are these sectors in particular so absolutely crucial to AMD's current trajectory?
Well, what's really fascinating here is how JinLog's analysis directly ties AMD's recent performance specifically to these sectors. It's not just about general tech industry growth, It's about the specific, robust, and frankly insatiable demand in areas where AMD has made truly significant inroads.
Right.
And when you look at their Q1 performance, it dramatically underscores this connection. Our source highlights that in Q1, AMD's revenue soared to an impressive $7.4 billion. Now, that figure itself is substantial, but what makes it truly striking is that it represents a 36% increase year over year. Think about that for a moment. For a company of AMD's scale, already a multi-billion-dollar enterprise, a global player, to achieve revenue growth of over a third in just 12 months. That's a testament to extraordinary market traction.
Yeah, that's not just creeping up. That's a leap.
It's a substantial leap forward, yeah. It indicates that their strategic bets on AI and data center hardware are really paying off handsomely.
And beyond just the top-line revenue, what about profitability? The gross margin figures are right there, too, telling another important part of the story.
Absolutely. The gross margin on a GAAP basis that's generally accepted accounting principles was a healthy 50%. But even more impressively, on a non-GAAP basis, it climbed to 54%.
54%.
Yeah. 54% non-GAAP gross margin for a semiconductor company is remarkably robust. It essentially means that for every dollar of revenue AMD brings in, they're retaining a very healthy 54 cents after accounting for the direct costs. Manufacturing, selling their products, excluding certain non-cash stuff like stock-based compensation.
Okay.
This high margin is a clear signal of efficient cost management and, crucially, strong pricing power for their cutting-edge products. In a capital-intensive industry like semiconductors, having such healthy margins provides vital financial firepower for continuous innovation, aggressive R&D, expanding product lines, especially in these really competitive high-growth areas like AI and data center.
Right, fuels the next cycle.
Exactly. It shows they're not just selling more units, they're selling them profitably, which allows them to outinvest competitors in the long run.
So this 36% revenue jump, coupled with those healthy margins, it isn't just a generic tech boom story then. JinLog's source explicitly pinpoints the precise driver.
Precisely. The report explicitly states this growth was driven by robust AI and data center demand fueling share gains. This is the core insight, the critical nugget of knowledge here. It tells you that AMD isn't merely riding a rising tide, they are actively increasing their slice of the market in the most lucrative and fastest growing segments of the tech industry.
Beating share, that's key.
It is. The demand for AI hardware, like the specialized accelerators, the high bandwidth memory, the sophisticated interconnects needed to train and run complex AI models, It's quite literally exploding. And data centers, the very backbone of the digital economy powering everything from cloud computing to enterprise apps. They're undergoing massive, unprecedented upgrades specifically to handle this surge in AI workload. AMD's strategic, aggressive focus on these areas is clearly yielding significant dividends, positioning them as a critical enabler of this whole AI revolution.
What does a 36% revenue jump truly mean in the context of a company of AMD's size? It sounds big, but what's the real-world impact for you, the listener, trying to understand this?
Yeah, it's not just incremental growth. It suggests really strong market traction and successful product deployment, particularly in those high-demand segments. When a company the size of AMD can achieve a 36% year-over-year revenue increase, it implies their products are not just competitive. They're actively displacing entrenched competitors, or maybe capturing entirely new market opportunities that didn't even exist before. It means their substantial investments in developing cutting-edge chips for AI accelerators and powerful data center CPUs, well, they're yielding significant tangible returns. For you, the learner, what this really underscores is not just AMD's impressive growth, but the almost singular transformative power of AI demand right now. It's creating an acceleration curve for chip makers that goes far beyond traditional tech cycles.
All right, forcing a whole reevaluation.
Exactly. A reevaluation of who the long-term winners in this critical space will be. It's a powerful signal of a company getting profound momentum and really solidifying its position within these critical future-defining markets.
Okay, let's shift gears a bit. Our source comes from JinLog, described as a top trader, and they introduce a very specific methodology, the VPAR rhythm trading method. For many of us, this might sound a bit complex, maybe even proprietary. Can you help us understand what it is and, more importantly, why it's used?
Absolutely. The VPI method is presented as a pretty sophisticated approach designed to, quote, capture overall flow timing and selectively respond only to key news and events at major support pivot levels. This immediately signals that it's about a disciplined, strategic approach to market entry and exit rather than, a frantic, reactive one.
Okay, discipline is key.
Very much so. The core philosophy behind VPR is to shrewdly avoid what JinLog's source calls reacting to every piece of news and event, which, as they wisely point out, can erode both capital and time. Think about it. In today's 2047 news cycle, especially in the stock market, you can be absolutely bombarded with headlines, analyst upgrades, downgrades, endless social media chatter.
Oh yeah, information overload.
Totally. If you attempt to trade on every single piece of information, you'll likely find yourself constantly buying high and selling low, getting whipsawed by short-term volatility and incurring transaction costs that quickly eat into any potential returns. VPA aims to cut through that debilitating noise, offering a structured filter for action.
So it's truly about being strategic rather than reactive. It sounds like it's trying to find the bigger currents, the underlying momentum, rather than just responding to every fleeting wave or headline.
Precisely. Imagine a highly skilled sailor navigating a vast ocean, right? Not trying to tack with every little gust of wind, but rather waiting patiently for the powerful, sustained currents and shifting tides. The VPA method instead focuses intensely on overall flow timing. This means observing the broader, fundamental underlying direction of the market or a specific stock, rather than getting caught up in the distracting day-to-day or even hour-to-hour fluctuations.
Seeing the bigger picture.
Yeah, it's about understanding the deep, persistent rhythm of the market where it's truly headed over a longer, more impactful period. This method isn't just about tactical timing. It's a testament to the profound psychological discipline required in trading, the ability to cut through constant noise to act only on truly validated signals. That's a principle applicable far beyond finance, really.
Definitely.
And critically, it responds selectively to key news and events, but only at major support pivot levels. This is where the discipline becomes actionable and, frankly, paramount. News or a company announcement might be incredibly exciting, but if the stock isn't simultaneously at a specific price level where historical data suggests strong buying interest, a support level, or a significant turning point, a pivot, then the VPA method advises extreme patience.
Waiting for the confluence.
Exactly. It's about timing your entries when the statistical odds are most in your favor, using fundamental news as a powerful confirmation signal, not as the sole impulsive trigger.
So it's a sophisticated blend then. Watching the big picture, understanding market psychology, and waiting for very specific triggers at opportune moments.
Exactly right. The method also strongly emphasizes monitoring both sector and individual stock trends and meticulously tracking live indicators. This holistic, multifaceted view is absolutely crucial. A stock might look promising in isolation, but if its entire sector is facing significant headwinds, maybe due to broader economic shifts or regulatory changes, that fundamentally alters the outlook.
Context matters.
Hugely. Live indicators provide real-time confirmation of those trends and price levels, giving traders an up-to-the-minute pulse on market dynamics. The ultimate goal, as the source states, is to manage risk while pursuing higher returns. This highlights that robust risk management isn't an afterthought or a secondary consideration. It's fundamental, underpinning the entire strategy and the disciplined pursuit of profitable opportunities.
Makes sense.
And the VPAR method explicitly combines chart rhythm patterns with order flow analysis to identify optimal entry points. This blend is sophisticated and sets it apart. Chart rhythm patterns involve recognizing recurring price movements, volatility trends, formations on historical price charts. Order flow analysis, on the other hand, delves much deeper into the actual real-time buying and selling pressure in the market, understanding who is buying, who is selling, at what price, with what volume.
Seeing the intent behind the moves.
Precisely. It's about seeing the true intent of market participants. By combining these two powerful approaches, JinLog attempts to gain an incredibly clear picture of market participants' intentions and pinpoint precise moments when the market is likely to move in a favorable direction, thus leading to those highly coveted optimal entry points. This holistic view, going far beyond just the headlines or simple chart patterns, is what JinLog advocates for navigating a notoriously volatile and complex market.
Even if you're not trading, this concept of rigorously filtering information and waiting for key multi-layered signals is profoundly applicable in so many fields, from large-scale business strategy to complex personal decision-making. It's about being truly informed, but crucially, not overwhelmed by the sheer volume of data. A truly valuable lesson in our information-saturated world.
Well said.
Okay, here's where it gets really interesting and perhaps a bit more intricate for some of our listeners. How does this VPA method, with its focus on rhythm and order flow, actually translate into a concrete analysis of AMD's current chart and potential future movements? JinLog source dives into both rhythm analysis and Elliott wave analysis.
Right, this is where the core of JinLog's technical approach truly shines. They use several sophisticated indicators to read the market's underlying rhythm and, based on historical patterns, predict its potential waves. Like an expert musician discerning the underlying melody, harmony, and structural changes of a complex orchestral piece by listening for recurring patterns and movements.
Nice analogy. Okay, let's start with rhythm analysis. How exactly does JinLog's source read the market's pulse for AMD right now?
All right. Our source states that the current market for AMD, largely driven by that incredibly strong AI and data center demand, has decisively entered a high volatility phase. Now, for some, high volatility might sound alarming, right? Implying risk or unpredictable swings.
Yeah, usually a warning sign.
But for a disciplined trader like JinLog, high volatility also means there are larger price swings, which, paradoxically, can present greater opportunities for capturing significant gains, if one can accurately time those movements. Despite this increased volatility, AMD is described as showing a robust rhythm uptrend at the upper Bollinger Band.
Okay, that's quite a bit of technical jargon packed into one phrase. Can you help us break down what Bollinger Bands are, and what does AMD trading at the upper Bollinger Band tell us about its current momentum?
Certainly. Imagine Bollinger Bands as a dynamic envelope or channel drawn around a stock's price. There's an upper band, a lower band, and a middle band, which is typically a moving average. These bands automatically expand when price volatility increases and contract when it decreases.
Got it, like rubber bands stretching and shrinking.
Kind of, yeah. When a stock's price is consistently trading at the upper Bollinger Band, particularly when the bands themselves are expanding, it signifies extraordinarily strong, sustained upward momentum. It's like observing a powerful river whose banks are visibly spreading out because the current flowing upstream is so immensely powerful and fast. This consistently high positioning within the bands indicates that buying pressure is so strong that it's continuously pushing the price against the upper limits of its typical trading range. It suggests a lack of significant selling pressure even at higher prices. For a seasoned trader, seeing AMD consistently riding the upper band in a high volatility phase isn't just about momentum. It speaks to the market's deep conviction that every pullback is a buying opportunity.
Interesting. So conviction, not just speed.
Exactly. It might indicate a significant capitulation of bearish positions or perhaps a strong influx of new institutional money. It's a signal of persistent underlying demand that can override temporary overbought conditions.
Okay, and the source mentioned different time frames, short-term and swing.
Right. The source also states that both the short-term and swing stages for AMD are firmly in the rhythm rising maintenance stage, which is further confirmed by Bollinger Band expansion. This means that on both shorter time frames, looking at days to a few weeks, and intermediate time frames, maybe weeks to a few months, the upward momentum is not only present, but is being vigorously maintained.
Maintained, okay.
And the continued Bollinger Band expansion confirms that this upward movement is accompanied by increasing volatility, which, again, indicates substantial energy and strong conviction behind the price increases.
And what about the midterm stage? Does it show the same underlying strength or a different pattern emerging?
The midterm stage is described as being in an expansion phase following band contraction, which critically suggests additional upside once the band's midpoint pivot is reclaimed. This is a key insight into the broader picture. It implies that after a period of lower volatility or consolidation, that's the band contraction, the price is now moving into a new, more dynamic phase of expansion.
Right, building energy again.
Exactly. Reclaiming the band's midpoint pivot would be a highly significant bullish signal. It would indicate that the stock has decisively overcome a key resistance level or a consolidation point and is now poised for further substantial upward movement on a longer time frame. It points to a maturing trend preparing for its next leg up.
So we have strong upward momentum across multiple time frames. The source then talks about confirming signals like the MED and RSI. What do these specific indicators add to the rhythm analysis, and why are they important?
These are absolutely crucial confirming indicators, like additional layers of validation. A MACD golden cross is a highly regarded bullish signal in technical analysis. MVD, or moving average convergence divergence, is a trend-following momentum indicator. It shows the relationship between two moving averages of a stock's price.
Right.
A golden cross occurs when the MACD line crosses decisively above its signal line. Traders typically interpret that as a strong indication that momentum is shifting from bearish to bullish, or that existing bullish momentum is significantly strengthening.
Okay, and the volume surge.
Yeah, the surge in volume further reinforces the volume expansion signal. It means that the price increases we've observed are accompanied by a significant and growing amount of trading activity. High volume on an uptrend is crucial because it suggests strong conviction among buyers and widespread participation. It lends substantial credibility and sustainability to the upward move.
Makes sense. More people joining the party.
Something like that. Now, the source does mention RSI overbought warnings. RSI, the Relative Strength Index, is a momentum oscillator measuring the speed and change of price movements. An RSI reading above 70 typically suggests a stock is overbought and might be due for a short-term pullback or consolidation. It implies buying pressure has been exceptionally strong and could be unsustainable in the immediate term.
So, potential yellow flag there.
Potentially. But it's vital to note that in exceptionally strong trends, which you often see in high-growth sectors or during periods of intense speculative interest stocks, can remain overbought for extended periods as new capital continuously flows in. The fact that JinLog highlights the overall robust rhythm uptrend, despite these warnings, indicates they view the underlying systemic strength and momentum as overriding these short-term overbought conditions.
Okay, so the main trend is strong enough to possibly push through that.
That seems to be the interpretation here. It's like our river analogy again. Even if there are small eddies, the RSI warning suggesting a momentary pause might occur, the main current is still flowing powerfully upstream. It implies the overall trajectory remains positive based on the comprehensive rhythm analysis. It suggests that while there might be brief pauses or shallow corrections, the dominant trend is firmly established.
Okay, that makes sense. Building on this rhythm analysis, the source also incorporates Elliott wave analysis. So for those less familiar, what exactly is that, and how does JinLog apply it here to AMD's potential movements?
Right, Elliott wave theory. It posits that market prices don't move randomly, but rather in recognizable patterns or waves. These waves reflect the collective psychology of investors, driven by fear and greed. It's a fractal theory, meaning these patterns repeat at different scales. It helps identify cyclical trends and, crucially, predict future price movements based on these recurring behavioral patterns.
Mapping human behavior onto charts.
In essence, yes. The core idea is that market movements typically unfold in a 5-wave pattern in the direction of the main trend. Those are called impulse waves, followed by a 3-wave correction against that trend, the corrective waves. It's an attempt to map that ebb and flow of market sentiment.
Okay, so how does JinLog apply this intricate theory to AMD?
They apply it to different time frames, providing specific context for each. For the short term, they identify Wave 3 underway with an explicit entry at $160. This is paired with a very specific confirmation signal called Trap 33 and rhythm expansion.
Wave 3, it's supposed to be the powerful one, right?
Exactly. In the Elliott wave framework, Wave 3 is typically the strongest and longest upward move within an impulse sequence. It's often where the majority of the price action occurs, driven by increasing institutional buying and widespread market participation as the trend becomes undeniable. So identifying Wave 3 as underway suggests that a powerful upward move is either in progress or imminently expected for AMD in the near term.
That's fascinating. So for the short term, Wave 3 is the powerful upward leg. What does it mean for a stock to then be in Wave 4 on a swing time frame? And what's this consistent Trap 33 mentioned across all of them?
That's a critical question, and it really speaks to the layered nature of this analysis. In Elliott wave, Wave 3 is, as I mentioned, usually the most impulsive and extended part of an uptrend, often signifying broad market acceptance. When we then look at the swing time frame, typically weeks to a few months, the source indicates a Wave 4 corrective phase with an entry at $137, again paired with Trap 33 and volume expansion.
Wave 4 is the pullback.
Generally, yes. Wave 4 is a corrective pullback that naturally follows the powerful Wave 3. It's typically a period of consolidation or a slight retracement against the primary trend. Crucially, it shouldn't overlap with the peak of Wave 1, maintaining the overall bullish structure. This implies that after the strong short-term Wave 3, there might be a moderate, healthy pullback, providing a new entry opportunity before the next and final leg up.
And then Wave 5 for the midterm.
Right. For the midterm perspective, JinLog's analysis points to a Wave 5 extension phase, with a significant target at 226 oxes, once again validated by Trap 33 and rhythm re-expansion. Wave 5 is the ultimate push higher in the impulse sequence, often driven by widespread public enthusiasm before a more significant lasting correction begins. An extension phase means this Wave 5 could be longer and more powerful than a typical fifth wave, suggesting substantial upside potential in the medium term before the pattern completes.
So potential for a big final push.
That's the implication. It suggests that while there might be short-term corrections, the overall bullish pattern suggests a compelling longer-term trajectory.
Okay, now about that consistent Trap 33 condition mentioned across all time frames, what is that? Is it like a final check?
Yeah, it seems to function that way. This is a specific proprietary confirmation signal within JinLog's VPAR method. While the exact mechanics of JinLog's Trap 33 aren't explicitly detailed in the source, trap conditions in trading generally refer to situations where the market attempts to trick or mislead traders.
Like a fake out.
Exactly. It might involve showing a false breakout above a resistance level, or a reversal signal that doesn't actually pan out, only to snap back and trap traders who reacted too quickly. A trap resolution means that these false signals have been decisively invalidated, or that the market has moved definitively past a tricky, deceptive point. This indicates a much higher conviction in the identified wave pattern and the stock's intended trajectory.
So the trap has been sprung and avoided.
Essentially, yes. The 33 likely refers to a specific, rigorous set of 3 confirming criteria that must be met for this trap resolution to be considered valid and actionable. It reinforces the reliability of the signal. This kind of trap resolution provides a higher degree of conviction, ensuring that JinLog's entries aren't based on fleeting signals, but on genuine underlying shifts in market momentum. It helps traders avoid getting caught in misleading price movements.
This truly demonstrates how sophisticated analysts combine different technical tools and proprietary signals to build a comprehensive, multi-layered view of a stock's potential trajectory. It's about looking at deep-seated patterns in market behavior in psychology, not just isolated data points or daily headlines. They're trying to predict the market's next significant move by understanding its rhythm and its predictable psychological waves.
That's a good way to put it.
All right, moving beyond the charts and technical patterns, which are inherently backward-looking and pattern-based, what are AMD's actual real-world moves in the market? What specific events, product launches, and strategic initiatives are shaping their future, especially concerning these critical areas of AI and data centers?
Right. This is where we connect the company's tangible, real-world actions to the market's perception and its future prospects. The source highlights key recent and upcoming events that are directly influencing JinLog's outlook, particularly demonstrating AMD's aggressive and frankly well-timed push into cutting-edge AI and data center solutions.
Okay, what are some examples?
First, On June 12th, at a highly anticipated event called Advancing AI 2025, AMD made a significant splash. They unveiled next-gen AI servers and an open AI ecosystem vision. This wasn't just a minor product update, it was a major strategic declaration. Next-gen AI servers means they are developing truly powerful, specialized hardware. They're Instinct accelerators, EPYC CPUs, specifically designed to handle the incredibly intensive computational demands of AI.
The heavy lifting machines.
Absolutely. These are the workhorses, the machines that will power everything from training massive large language models to complex data analytics and scientific simulations in the years to come.
And what about this open AI ecosystem vision? That sounds particularly interesting, especially given the current landscape, which seems dominated by certain proprietary platforms. What's the strategic play there?
Ah, yes. An open AI ecosystem vision is a profoundly strategic move for AMD. It aims for broad compatibility and widespread collaboration. It's designed to make it significantly easier for developers to build, optimize, and deploy AI applications on AMD's platforms, rather than being locked into proprietary systems like, say, NVIDIA's UBIA.
Okay, so aiming for openness as a competitive advantage.
Precisely. This is a crucial differentiator. By fostering an open, accessible environment, AMD can attract a much wider range of developers, researchers, and partners. This can accelerate the adoption of their AI hardware and software solutions dramatically. It's a strategy designed to build powerful network effects. The more developers and enterprises use and contribute to AMD's open ecosystem, the more attractive AMD's solutions become to other potential users and customers, creating a self-reinforcing cycle.
Makes sense. Challenges the closed garden approach.
Directly. It challenges competitors who might prefer more closed systems, as AMD aims to democratize AI development and position itself as the open, flexible platform of choice. This vision could significantly broaden their addressable market and accelerate their market share gains.
And then, shortly after that strategic announcement, there was a very specific product launch mentioned.
Exactly. On July 23rd, AMD followed up by launching the Radeon AI PRO R9700 32GB. This is explicitly designed for enhancing on-premise AI workload competitiveness. The Radeon AI PRO R9700 is a professional-grade AI accelerator, essentially a highly powerful GPU specifically tailored for demanding AI tasks like machine learning inference, certain training workloads.
And the 32 GB.
That's the memory.
That's right. It refers to its substantial memory capacity, which is absolutely vital for processing the increasingly large and complex AI models that are becoming standard. This large memory footprint allows for higher performance and handling larger datasets directly on the device.
Okay, what exactly does on-premise AI workload competitiveness mean, and why is making that distinction so important for AMD's strategy? Good question. On-premise AI workload competitiveness speaks directly to AMD's concerted efforts to provide powerful, highly efficient, and cost-effective solutions for companies that choose to run their AI tasks within their own physical data centers and existing infrastructure, rather than relying solely on external cloud providers.
For companies keeping AI in-house.
Exactly. Many enterprises, particularly those with sensitive or proprietary data, stringent security requirements, or specific regulatory compliance needs, prefer to keep their critical AI workloads in-house for greater control and data governance. AMD is directly addressing the significant market niche, offering high-performance, cost-effective solutions that can robustly compete with alternatives for these crucial, internally managed AI operations. This is a vital and growing segment for many large enterprises looking to deeply integrate AI into their core operations while maintaining full control and security over their data and processes.
And looking ahead, there's a very specific date that investors and analysts will be keenly watching.
Indeed. August 5th, that's the scheduled Q2 earnings release at 5:00 p.m. EDT. Earnings reports are always pivotal moments for any public company, right? Like a quarterly report card. They provide a detailed look at financial performance and, crucially, future guidance. The market will be watching this report with intense interest to see if the exceptionally positive trends seen in Q1 have not only continued but possibly accelerated, and if AMD's future projections remain as strong and optimistic.
Lots riding on that call.
Absolutely. That call often provides a wealth of operational detail that influences JinLog's fundamental assessment.
Speaking of projections, the source also provides insights into AMD's financial flow and guidance, which ties directly into what we might expect from that upcoming earnings release.
Precisely. The Q2 revenue guidance is projected to be between $7.1 billion and $7.7 billion. What's truly significant about this forecasted range is that it is explicitly above consensus. Consensus refers to the average expectation compiled from financial analysts who diligently cover the stock.
Right, what Wall Street expects.
Exactly. When a company issues guidance that is above what the broader market generally expects, it's a powerful positive signal. It suggests that AMD's internal projections, based on their deep insights into demand, order books, production capabilities, well, they're more optimistic than the average analyst expectations. This indicates robust underlying demand and strong confidence in their ongoing business momentum.
And the cash flow and debt situation.
Also looks solid, according to the source. It notes robust cash flow and stable leverage ratio. Robust cash flow means the company is consistently generating a significant amount of cash from its core operations. That provides immense financial flexibility. This cash can be strategically deployed for aggressive investments in new technologies, for efficient debt repayment, or even for returning capital to shareholders through buybacks or dividends.
Flexibility is key.
Absolutely. And a stable leverage ratio indicates that the company's debt levels are manageable. They're not increasing disproportionately to its assets or earnings, suggesting prudent financial management. Combined, these financial health indicators paint a picture of a company with strong operational health and a solid balance sheet, crucially capable of funding its ambitious AI initiatives, investing heavily in new tech, and navigating potential market fluctuations from a position of inherent strength.
This really shows how a company's strategic product launches and bold announcements directly feed into investor sentiment and financial forecasts. It's not just about today's revenue, but about shaping future market share and long-term profitability through consistent innovation, strategic execution, and aggressive market penetration. The real-world actions are directly driving the financial outlook, validating JinLog's bullish technical and fundamental views.
Well put. The pieces fit together.
Okay, so we've dissected the company's performance, its strategic moves, the technical underpinnings. What does all this incredibly detailed analysis truly mean for someone tracking AMD from an investment perspective? The source provides very specific entry points and targets, along with intricate strategy scenarios.
Right. This is where the VPAR method translates directly from theory into highly actionable plans, precisely tailored for different investment time horizons. JinLog doesn't just give a vague buy recommendation. They provide a meticulous blueprint with specific price levels and conditions. It demonstrates the remarkable precision and discipline of their approach.
What are some of those specifics?
The source outlines overall entry points at $160 for a short-term trade, $137 for a swing trade, and $125 for a midterm position. Correspondingly, it sets overall targets at $181, $195, and an ambitious $226, respectively, for those timeframes.
Very precise number.
Extremely precise. This level of specificity is absolutely crucial for disciplined trading. It provides you, the listener, with a clear roadmap for where to consider initiating a position and where to potentially take profits. It gives structure to otherwise volatile market movements. It really embodies that VPA philosophy of pre-planned, deliberate action.
And what if the price doesn't hit those exact entry points immediately, or if there's market volatility? Is there a contingency plan built into the strategy?
Yes, absolutely. JinLog includes a clear pullback strategy. On any pullback, consider re-entering in the $130, $140 range over the next 4-6 months. This acknowledges a fundamental truth about markets. They rarely move in a perfectly straight line. Right.
Definitely not.
Even the strongest uptrends experience temporary dips, corrections, periods of consolidation. This strategy allows investors to capitalize on those dips, potentially averaging down their cost basis on existing positions or initiating entirely new positions at more favorable prices, with the expectation that the longer-term trend, validated by the VPAR method, will eventually resume. It's a common tactical move for disciplined traders to take advantage of short-term weakness in a fundamentally and technically strong stock, turning a potential concern into an opportunity.
Buying the dip, but strategically.
Exactly. And beyond just the price points, JinLog's investment opinion is broken down into specific strategy scenarios, each with very detailed multi-conditional requirements that must be met. This is fundamental to the VPA method's robust, risk-managed approach. It's about validating the trade setup with multiple layers of confirmation.
Let's break down these strategy scenarios then, starting with a short-term buy. What are the specific conditions JinLog is looking for there?
Okay, for a short-term buy strategy, around $160, the recommendation is to buy once rhythm rising and volume expansion signals are confirmed. The conditions are notably precise and interlocking. Trap resolution 33 plus rhythm rising trend plus volume expansion signal plus confirmation of AI data center event.
Wow, that's a checklist.
It really is. So it's not merely about the stock price hitting $160. You need the trap resolution 33, which, as we discussed, means those potential false signals or deceptive market movements have been definitively cleared, providing high conviction. Then, a rhythm rising trend indicates that the underlying upward momentum, shown by indicators like the Bollinger Bands, is firmly established and maintained.
Okay.
A volume expansion signal means this bullish price movement is backed by increasing trading activity, lending crucial credibility and sustainability to the trend. And finally, confirmation of AI data center event means that fundamental news or significant developments in those specific sectors are aligning positively, reinforcing the technical signals and providing a fundamental catalyst.
So technicals, volume, news, everything has to line up.
All these pieces, yeah. A constellation of confirming signals must precisely come together for JinLog to consider it an optimal short-term entry, significantly de-risking the trade.
It's truly interesting how specific these entry points are and how they're so tightly tied to a confluence of conditions. What does channel sentiment refer to in the swing strategy? That sounds like a broader, more qualitative factor.
Excellent question. For the swing buy strategy near $137, the suggestion is to add when trap 33 is resolved and AI event momentum is present. The conditions listed are equally rigorous. Trap resolution 33 plus maintained rhythm uptrend plus confirmation of high volatility market regime plus positive shift in channel sentiment.
Okay, so similar structure, but with channel sentiment. What's that?
Right. Again, trap resolution 33 is paramount, acting as that crucial filter. Maintained rhythm uptrend means the underlying upward movement continues to hold its strength. Confirmation of high volatility market regime implies the market is still experiencing large, profitable price swings, good for swing trading. Now, regarding positive shift in channel sentiment, think of this as the collective buzz or prevailing narrative around a stock across all public and professional information channels.
The overall feeling about the stock.
Pretty much. This isn't just a gut feeling. It's often gauged through the tone of analyst reports, the prevalence of positive or negative keywords in financial news headlines, and even the aggregated sentiment from social media platforms, which we'll get to. A positive shift means that this broad consensus is turning more optimistic, creating a powerful psychological tailwind for the stock, reinforcing the momentum for swing trades. This external validation adds another layer of confidence to the technical signal.
Got it. External buzz confirming the internal signals. And for the longest term perspective, the midterm strategy, what does JinLog advise?
For the midterm buy strategy, around $125 consolidation, the advice is to look for opportunities when rhythm development is confirmed, framing positions within a long-term upward box range. The conditions for this are trap resolution 33 plus rhythm development stage plus long-term upward box range perspective.
Okay, trap 33 plus even stronger confirmation.
That's how it reads. It suggests an even stronger, perhaps more advanced confirmation or a higher degree of confidence in the trap resolution, indicating very high conviction for a longer-term hold. Rhythm development stage implies that the market's underlying upward trend is maturing, becoming more established, showing robust, sustainable characteristics, signaling a solid long-term trajectory.
And the upward box range, what's that signify?
A long-term upward box range perspective refers to a trading pattern where the stock is consolidating within a defined price range. But this range is, crucially, overall trending upwards over a significant period. It suggests a phase of accumulation within this upward-sloping channel, where institutional buyers might be quietly building positions, setting the stage for future significant moves higher. This methodical, patient approach indicates JinLog's strategy for long-term capital allocation, waiting for the optimal entry point during periods of accumulation, rather than chasing quick gains. It aligns with a more patient investment horizon.
Patient accumulation makes sense for the long term.
Yeah, and the sheer granularity and multi-conditional nature of these strategies are a hallmark of this type of sophisticated technical analysis. The consistent repetition of trap resolution 33 or 33 plus across all time frames emphatically emphasizes its paramount importance as a confirming signal for the VPAR method. It acts as a powerful final filter, ensuring entries are made only when specific internal validations are met, reducing the likelihood of falling victim to false breakouts or fleeting reversals.
This section truly illustrates the careful, multi-conditional approach that sophisticated traders like JinLog employ. It's not just about hitting a single price point, but about a constellation of confirming signals, a rigorously defined checklist that must be satisfied. It shows that even in incredibly fast-moving markets, disciplined, multi-layered analysis is absolutely key to managing risk and pursuing returns. It's like having an incredibly detailed flight plan and pre-flight checklist before embarking on a critical mission. That's a great analogy for it. Now, let's broaden the view again. Beyond the nitty-gritty of charts, waves, and trading strategies, how is the broader market, and particularly the online community, reacting to AMD? JinLog's source shares what they call community flow from major platforms like Reddit, Twitter, and StockTwits. What's the buzz?
Yeah, this provides a truly fascinating qualitative layer to the technical and fundamental analysis. It reveals the tangible buzz around the stock. While it's not directly financial data in the traditional sense, community sentiment can significantly influence short-term price movements, reflect widespread retail investor interest, and even amplify existing trends. It's the pulse of the crowd, so to speak.
So what's Reddit saying?
Looking at Reddit, specifically the RAMD subreddit, the mention volume was up by an impressive 22% month over month, reaching a substantial 12,300 mentions. This indicates a significant increase in discussion and heightened interest within that large, dedicated community.
And what are they talking about?
What's even more telling are the top keywords that emerge from these discussions: AI, Zen 5, and Radeon AI. This clearly shows that the community's conversations are directly aligned with AMD's strategic drivers, their advancements in AI hardware, their next-gen CPU architecture, Zen 5, crucial for data centers and desktops, and their specific AI-focused GPU line, Radeon AI. It tells us the retail public is highly tuned into AMD's core innovations and strategic narrative.
It's particularly striking to see the high positive sentiment across platforms like Twitter and StockTwits as well. What does this overwhelmingly positive sentiment tell us about the collective investor mood?
Well, what's truly fascinating here is how these public platforms provide such a clear pulse on retail investor enthusiasm and their primary areas of interest. On Twitter, under the hashtag AMD hashtag, tweet volume surged by an even more dramatic 35% to 12,150 tweets. And the sentiment breakdown is overwhelmingly bullish, 68% positive, 20% neutral, and only a modest 12% negative.
Wow, 68% positive. That's high.
It's a very strong indicator of broadly positive, if not outright bullish sentiment among a wide and active audience of individual investors. Similarly, on StockTwits, a popular platform for social investing, mentions were up 13% to 7,000, with sentiment showing a robust 72% bullish bets versus only 28% bearish bets.
Even higher there.
Yeah. The consistent high positive and bullish sentiment across these prominent platforms suggests a strong underlying collective belief in AMD's trajectory among individual investors and online communities. It's not just that people are talking about AMD, they're talking about it very positively and openly placing bets on its continued rise. This collective optimism can act as a powerful psychological tailwind for the stock, encouraging further buying from the retail segment and potentially reinforcing the overall upward trend.
Beyond the community buzz, which, can sometimes be fleeting, JinLog's source also delves into institutional flow. This represents the movement of much larger sums of money from the big players, hedge funds, mutual funds, pension funds. How's that looking for AMD?
This is a critical piece of the puzzle, as institutional money has the sheer scale to move markets on a much larger and more sustained basis than individual retail investors. The report states that institutional net buying increased to 22% share. This means that a significant and growing portion of the trading activity in AMD is now driven by large institutional investors who are net buyers. They are accumulating more shares than they are selling.
The smart money is getting in.
Well, when institutional investors are actively accumulating a stock, it's often seen as a strong vote of confidence. It signals that professional money managers, after their own rigorous analysis, believe deeply in the company's future prospects and are allocating substantial capital accordingly.
And what about the short sellers? People betting against the stock.
Good point. In contrast, the short interest stable around 5%. Short interest refers to the percentage of a company's tradable shares that have been sold short by investors betting on a price decline. A stable and relatively low short interest of 5% is quite significant. It suggests that there isn't widespread, aggressive, bearish sentiment among those who actively bet against stocks, which is often a strong indicator of underlying weakness.
So not many big players betting against it.
Doesn't seem like it. If short interest were high and rapidly increasing, it would imply a significant portion of the market expects the stock to fall, which is clearly not the case here for AMD. This relative absence of significant short-selling pressure frees the stock to move upward more easily.
And there's a specific type of institutional investment highlighted, AI-focused ETFs. What's the significance of increased holdings there?
Yes. The source notes that AI-focused ETF holdings up 18%, which is explicitly signaling greater data center capex. ETFs, exchange-traded funds, hold a diversified basket of assets, allowing investors exposure to specific sectors or themes. AI-focused ETFs hold stocks of companies heavily involved in artificial intelligence.
Right.
An 18% increase in AMD's holdings within these ETFs means that fund managers are actively and deliberately allocating more and more capital to AMD as a key foundational player in the booming AI space. This in turn signals greater data center capex, that is, increased capital expenditure. Because these large funds are betting on a future where companies will spend heavily on building and upgrading data centers, specifically to support increasingly demanding AI workloads. It signifies a profound, long-term structural investment trend by major financial players positioning for the secular growth of AI infrastructure.
So the ETFs are betting big on AI infrastructure growth, and AMD is a key part of that bet.
Exactly. Finally, the source mentions that a rise in HFT and algorithmic trading participation may accelerate the trend. HFT, high-frequency trading, and algorithmic trading involve complex computer programs executing trades at milliseconds based on specific signals, inefficiencies, or news. Their increased participation suggests that once a trend is clearly established in AMD upward or downward, these automated high-speed systems can quickly amplify and accelerate that trend, potentially making price movements more rapid and pronounced.
Making the moves happen faster.
Potentially, yes. It means the market is becoming incredibly efficient in reacting to information and patterns, which for a stock with strong underlying momentum can mean faster appreciation.
This comprehensive view highlights the multifaceted nature of modern market analysis. It's not just about dissecting financial statements, but also about understanding the collective mood of both retail and institutional investors, and crucially, the sophisticated flow of institutional capital. It paints a detailed picture of a stock with strong, broad-based momentum supported by a wide range of interested parties.
A confluence of factors, definitely.
Okay, but no true deep dive into an investment outlook, especially one as promising as AMD's appears to be, would be complete without a counted consideration of the risks. What are the potential headwinds or pitfalls AMD faces, according to our source, JinLog?
Indeed. Critical thinking absolutely requires looking at both sides of the coin. JinLog provides a concise yet potent summary of both the opportunities and the risks, and it's essential for us to understand the potential pitfalls, even when a company appears to be on such a strong upward trajectory.
Let's start with the opportunities first, just to frame it.
Sure. The primary one identified is that continued AI data center demand may drive revaluation. Revaluation in this context means the market could potentially assign a significantly higher intrinsic worth or a higher price-to-earnings multiple to AMD's stock, based on its increasingly dominant and irreplaceable position within these rapidly growing sectors.
Meaning the stock could be worth more than people think right now.
Potentially, yes. If the demand for AI and data center components remains robust or even accelerates beyond current expectations, and AMD continues to capture significant profitable market share, investors might be willing to pay a premium for its future earnings potential, pushing the stock price considerably higher beyond what current valuations might suggest. It implies that the current market price may not yet fully reflect the immense future earnings power that will flow from these booming segments. That's the bullish thesis in a nutshell.
That's the exciting upside. Now, what about the potential risks? JinLog's source immediately points to competition, which is always fierce in the semiconductor space.
Yes, competitor pricing pressure is identified as a very significant risk, and the source specifically mentions NVIDIA and Intel. This raises an important question for AMD's long-term strategy. NVIDIA is currently the overwhelmingly dominant force in AI accelerators with its powerful GPUs holding, an estimated 80–90% market share in AI training.
Massive share.
Huge. And Intel, while having faced challenges in recent years, is still an absolute giant in CPUs and is aggressively pursuing its own AI and data center initiatives, their Gaudi accelerators, robust Xeon CPUs. The semiconductor industry is incredibly competitive, a true battleground of innovation, and these companies are vying for market share in the exact same lucrative, high-growth segments where AMD is also focused.
So a price war could hurt margins.
It certainly could. If NVIDIA or Intel introduce even more competitive products at lower price points, or if they intensify their marketing efforts and aggressively discount existing products, it could definitely impact AMD's profit margins and slow down its hard-won market share gains. It's a constant, brutal battle for innovation, engineering prowess, and crucially, cost efficiency.
Okay, whether risks are flagged.
Another notable risk is pullbacks from options overbought signals. As we discussed earlier with the RSI, overbought signals generally suggest a stock might have risen too far, too fast, and could be due for a short-term correction or consolidation. When this is specifically tied to options overbought signals, it means that a very high volume of bullish options contracts financial bets on the stock price going up might indicate excessive, perhaps even irrational optimism in the short term.
Too much optimism baked in.
Potentially, yeah. If these bullish bets don't pan out immediately, or if the underlying stock doesn't continue its upward trajectory as rapidly as option buyers expect, it can trigger a cascading unwinding of these positions. This often leads to a temporary sharp price dip as traders scramble to close out positions, take profits, or adjust exposure, even if the underlying fundamental story remains strong. It's a short-term technical risk.
And the broader macroeconomic environment also plays a significant role, especially for tech stocks. What's the concern there?
Absolutely. Higher interest rate volatility in tech stocks is a general market risk that can disproportionately affect technology companies, particularly high-growth ones like AMD. Tech companies often have a significant portion of their current market valuation tied to future growth expectations and projected future earnings.
Right. They're valued on the future.
Exactly. When interest rates are higher or become more volatile and unpredictable, the present value of those distant future earnings is discounted more heavily. This effectively makes tech stocks less attractive to investors compared to other sectors that might offer more immediate or stable returns. This can lead to a broader dampening of investor enthusiasm for growth stocks like AMD, regardless of their individual operational performance, simply due to a shift in market appetite driven by macroeconomic factors.
And the last risk mentioned, supply chains.
Yeah, potential supply chain bottlenecks. This is a persistent and, as we've seen significantly in recent years, a very real concern in the global semiconductor industry. Chip manufacturing is incredibly complex, involves numerous specialized processes, and relies heavily on a global network of specialized suppliers for everything from raw materials to advanced equipment.
We all remember the chip shortages.
Exactly. Any disruption, whether due to geopolitical events, natural disasters, unexpected surges in demand that outstrip supply, or even localized labor issues, can lead to critical shortages of components. This could severely limit AMD's ability to produce and ship its chips, regardless of how strong that demand is. Even if AMD has cutting-edge products the market desperately wants, if they cannot get them to market in sufficient quantities, it will directly impact revenue, profitability, and crucially, their ability to gain and maintain market share against agile competitors. It's a very tangible threat.
Understanding these risks is just as important as understanding the opportunities. It helps you, the learner, appreciate the inherent complexities, competitive pressures, and uncertainties that are truly inherent in even the most promising sectors and companies. It powerfully emphasizes that no growth path, no matter how exciting, is without potential hurdles, and a balanced critical perspective is absolutely essential for informed decision-making.
Absolutely. A healthy dose of skepticism is always warranted.
So we've covered a tremendous amount of ground in this deep dive into AMD's stock outlook, meticulously guided by the powerful insights derived from JinLog's VPAR rhythm trading method. We've explored the incredible, almost unparalleled growth fueled by the accelerating demands of AI and data centers. We've dissected sophisticated technical signals like Bollinger Bands and Elliott Waves, understanding how they attempt to map market psychology onto price action.
Yeah, and we reviewed AMD's bold strategic product launches, grasped JinLog's very specific multi-conditional trading strategies, and gauged the diverse range of market sentiment from the online community buzz right up to major institutional investors.
Our core goal was really to provide you with a comprehensive understanding of how such an intricate, multi-layered analysis is constructed. We wanted to show you precisely how countless data points, ranging from raw financial figures to the subtle nuances of social media chatter and the colossal flows of institutional capital, how they all come together to form a truly holistic picture.
Right. It's about moving far beyond fleeting headlines to grasp the powerful underlying currents and the intricate ways various factors interdependently influence a company's market trajectory and its future prospects.
What's truly fascinating here is just how detailed and profoundly multi-layered this kind of analysis is. It offers rich perspectives for anyone interested in understanding the compelling, dynamic intersection of cutting-edge technology and the complex world of finance. It's not just about glancing at one chart or reading a single news article. It's about integrating all these complex, often disparate pieces into a cohesive, actionable strategy.
And if we connect this to the bigger picture, it becomes even more compelling, doesn't it? Given the increasingly intertwined and codependent nature of AI and data center growth, how might the accelerating advancements in one area fundamentally ripple through to reshape the other, creating entirely new paradigms?
That's a big question.
It is. And what novel challenges and perhaps even ethical dilemmas might arise from this accelerating, almost symbiotic dependency? This deep dive into AMD truly illustrates the relentless pace of innovation and the lightning-fast market response it engenders. It underscores how absolutely critical it is for companies like AMD to consistently stay at the very forefront of these profound technological shifts.
A constant race. Well, we hope this deep dive has given you plenty of new insights to mull over, sparked some fresh curiosities, and perhaps even provided a different lens through which to view the technology and financial worlds. Thank you for joining us on this deep dive. Until next time.